Greetings, everybody. This is Jeff Scott. This is my top-down review for July 21st, 2019. Today's title is, Will Earnings and the Fed Save the Bull? The bull really limped into the week's end, and I didn't realize how bad it was because the indices really didn't show us what's underneath, is my opinion. This is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for my tools. And trading involves risk. You and your loan are solely responsible for any investment decisions you make. This is a special day for me, so I do want to call someone out. And back in 1984, I met this girl on a blind date, proposed 2 days later, and today's our 34th anniversary. And she's got something to do with this because to do these weekend events or weekend programs, I start on Friday night. I spend most of my day Saturday looking at charts and formulating my opinions. And then Sunday morning, like now, I do my video. So thanks to my lovely wife, Sherry. Happy anniversary. And she's a great one. And as it says on the top, my best pick ever. If you think about it, if you do the math, I knew her 2 days. So she was a high closed doji with a Jeffrey buy signal off of support with volume. I have a lot of different tools, but really I need TradeStation and or Thinkorswim with my indicators, and then HGSI is where I do my analysis, and EdgeRater is a big helper. I use other tools as well. The thing about indicators, I use a lot of indicators. I know I use indicators. On the weekend, I really look at charts. During the week, I want to speed things up. I use indicators to help me find the charts. But I want to be able to look at the right edge of a chart and know whether I want to look at it further and move on to the next one. I look at probably 700-800 charts a weekend. So the indicators help me, but I make decisions based upon price and volume action, and usually based upon relationship to support. I am independent of the software program HGSI. But here's the email, the web address rather, and you get a free 30-day trial. If they ask who referred you, just tell them Jeff Scott, hgsidoc@gmail.com. And under investing strategies, you'll see hundreds of movies by me, Ron Brown, and others. I've been doing this since probably before the market correction in the early 2000s. Stock patterns are cyclical. Last week I said, it feels like we're rolling over, but we're going to probably go higher again. Well, I'll say the same thing again. It's almost as if you took this pattern, took off the top, and we have a couple of days where it feels like we're breaking out, then we roll over, then it feels like it's going to fall out from under us, and we break out to the upside again. Sort of like a Darvis box, and perhaps that's what we're in right now. And based upon the last couple of days being pretty rough, maybe we'll bounce quickly. More to follow on that. I'm not saying that that's what I think is going to happen. Because I don't know what's going to happen, I'm sort of doing a little bit of all three. I've raised some cash. I've got a few less positions. I've sold out of the money calls, and I use that money to buy puts, especially on my Amazon. I got my Amazon, put it at 2,000 going into earnings, and then I get an extra week. And I'll make a decision what to do probably right before earnings. Last year Amazon fell a lot during the summer and fall. It recovered nicely and it's had a good year this year. But I made the mistake of taking my puts off too soon. So we'll see. Haven't made a decision yet. I'll talk more about where I am in this market. Sectors on Friday, as you could see, mixed at best, lots of red. And the interesting thing, rates fell on the week, so you might have expected utilities and dividend payers to bump, yet utilities were down, communications are down, healthcare was down big, energy had a rough week. You had some industrials pop up. Energy on Friday actually bounced after an Iranian patrol boat seized a British tanker. But healthcare and energy have been leading this market lower, as you'll see. I think we can just stick with this and not go deep into the individual charts because the pattern's the same. You'll notice across the top, I've got the E-minis, the NASDAQ futures, and the Dow futures. You'll notice within the last several days, you've got a white box. This is a year chart plus. It's 12 months of chart. So it tells you over the last 12 months, And frankly, all time, these are the highs in the market. So despite the fact that this is going to be a somewhat negative report, it comes to you within days of all-time highs on the NASDAQ, the S&P 500, and the Dow, at least on their futures. You can see that we've got a new person sell signal, the yellow arrow down. That's a free indicator on Thinkorswim, a paid indicator on TradeStation. But you can also see across the top that the 17-day is still above the 50, above the 200. So even though there is a pullback here, the market's not over. Could get over this week. What looks worse here is the IWM, the Russell ETF, and you could see it's struggling to get away from here. Now it's in a sort of a cluster of their moving averages, but it too had a sell signal. So this one's different. Notice it hasn't taken out its highs as the others have. Now the VIX bounced a little bit. It's got a buy signal on. I put something on the web, I think on Tuesday night or Wednesday, saying that I had a green candle low on the VIX at the low jump bar. And that's something that I play with, looking for stocks that are extended not just to the upside but to the downside, and then look for reversal signals. So I played the VIX here. And then you have the dollar, which it's kind of forming a triangle here, but the dollar's really gone nowhere. If you look back since the beginning of the year, you had a peak in a valley, but you're kind of where you started the year at. So we'll see what the dollar does. The weekly charts, I think what I see on the weekly charts, nothing really different. You can see the big move on the VIX. I can see how this is just a little down move. So maybe I am and others are making too big of the sell-off this week. And maybe it's just a little blip. And again, notice that we hit weekly highs within the last week or two across the board on the top. Now, what's underlying? You can see that, or you can't really see, but I'll tell you that the rates had trended up the last week or two, and they actually pulled back this week. It was interesting dueling Fed speak. You had the guy from Boston on Friday killed the market, where he talked us off the 50 basis points and down to the 25. And after people listened to Powell and a couple others, they thought maybe we would have 50 back on. I think the end of the month, 25 basis points is baked in. If they do 50, it could be good or bad. The market may be concerned that the Fed knows something we don't know. If they do nothing, which is probably the right answer, I think the market will tank because they've already priced in this cut. Again, hard to see here, and I apologize. The yield spread between the 2s and the 10s actually dipped a little bit this week. And that's a negative on the market. And I think it dipped because of the concern about the Boston Fed talking down rate cuts on Friday. But that typically predates a recession. And one thing that I've noticed is that if the S&P is in pink, even with the rate cut dropping down to and inverting, it's not until the rate curves start going back up that the market sells off. So perhaps we still got a little bit of room here. The AD lines on both the small stocks and the big stocks pull back. You can probably see it better here on the NYSE. And I don't care if I'm looking at the Qs in the light blue, the diamonds in the green, the spiders in the yellow, down here the transports and the Russell. All of them turned down this week. But notice the AD lines are still just off multi-year highs. And the TLT with yields dropping actually turned up. Now, the green arrows here are last week's. And you could see that breadth came back. We're far from oversold, and we're still closer to overbought than oversold, at least on the longer term charts here. But breadth eased. Brett's my friend. Breadth eased. And you could see here that the shorter term 12-week new high, new low is really in a neutral position here. And 2 weeks ago, or a week ago, I was talking about, 2 weeks ago, I was talking about how it had peaked and it might be time to be concerned. The McClellan, we've been watching it for a while, higher highs on price, lower highs on oscillator, and summation index, lower lows. So you got clear divergences there. And same on the weekly, and perhaps that predicted some of the weakness we saw this week. Now, I mentioned that it feels worse underneath than the indexes. Those indexes, especially everything but the Russell, look okay. we are at 50-50 on the buckets. That means half the stocks are below the midline of their Bollinger Bands, half are above, and very few stocks are above and below. Now, by itself, that is a neutral reading, but we went from very bullish a week ago on the right to, at best, neutral today. On Thursday, on both the NYSE and the NASDAQ, we had a Hindenburg-Omen signal. The Hindenburg-Omen, the first one gets my attention. If I start to see more than one, I get more nervous. I recognize that only about 1 in 4 are very meaningful, that many of the HINDY signals are false positives or only a small pullback, but there hasn't been a major market meltdown in 50 years that were not followed by at least a single Hindenburg. So I see one, I stiffen my neck and I get a little bit concerned, and hence why I'm holding that Amazon put going into earnings. You could see in May, and we had a pullback then, we had a series of Hindenburgs, and if we went further back up, even the December market, or October, November, December market correction was preceded by some Hindenburgs. So it's enough to keep you aware. It's not enough to make you go to cash yet. Market tone, we went from bullish to chop. And if I look at sectors, you can see they've weakened, and now healthcare and energy have turned red. The big stocks, the FANG plus a few others, it's failed breaking out again. It's not in bad shape. It's sitting above the 200 and the 50, but you notice how all the moving averages except for the green 17 are trending down. You've got a sell signal. So we'll see. The Canaries certainly are not leading. What remains interesting to me is the leaders that I picked on March 3rd, despite the fact we've had a couple corrections, we had one big correction in the market, they're continuing to lead, or at least not to fall. And typically you see a lot of rotation and groups changing, and you don't usually see the leader list stay flat for as long as it has. There's probably something bullish underneath that. Now here's where I think the rubber hits the road this week for a number of reasons. One, we've got a GDP on the 26th, and I think a outperformance there may hurt rate cuts, and an underperformance will increase them. I always wonder, when does the Fed know, and do they already know what it's going to show? Durable goods, trade, jobless claims on Thursday, homes and energy on Wednesday, homes again on Tuesday. Notice, because you got a Fed meeting come up, I guess that's why there are no Fed heads speaking this week, which is kind of good because the market seemed to ebb and flow based upon the talking heads. What we do have this week is a massive week of earnings. Let's just review some of my favorites. We've got Halliburton, which is down in the dumps. Cadence, which has been a leader. Monday before the open, it's too late to do anything about those. We got TD Ameritrade on Monday afternoon. Celanese, a chemical company. Steel Dynamics. Steel has been looking interesting. That stock itself has been looking interesting. Tuesday, Coke. Biogen, a bellwether biotech in the past. Centene, a payer. We've got Tuesday afternoon, Visa, iRobot, Chipotle. Wednesday, Boeing, AT&T, Anthem Insurance. Wednesday afternoon, Facebook, PayPal, Tesla. Thursday, Nokia, Bristol Myers Squibb, Southwest Airlines. Thursday afternoon, that'll be the big one for me, Amazon. Friday, we got AbbVie, which I'm out of, McDonald's, and a few others. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? We limped into the weekend after setting new highs early in the week on major indices, while small stocks still trail. Internals under the surface look worse, with falling AD lines, decreased breadth, and a Hindenburg. Rates are falling into a Fed decision, but surprisingly, the regional banks looked interesting. More on that. News and earnings likely will drive markets higher or lower this week. Iran seizing the British tanker, that could impact oil prices. GDP will give us a sense of the economy. Everything that we hear on the economy and the Fed are going to be scrutinized in regards to the size of cut. While banter among the left and the right continues, we've had the first shot at impeachment that failed to get out of the Dems in the House. And oh, by the way, seasonality sucks this time of year. I still believe the Fed will keep this market going into year's end, but short term there can be a correction, at least a pullback. As I mentioned, I bought puts on my Amazon before Netflix earnings, and I'll hold them through earnings. I have a couple of short-term bearish positions, but I'm still slightly weighted to the long side. As I said, it's a big earnings week. All right, I'm not going to spend a lot of time since it's my anniversary. I would like to spend some time with my wife, but let's take a look at where I think the market is and why. Let's go into my other market force and divergence. So I look at a number of indicators, short-term, long-term, to get a sense of what the market's doing. And is this going to not be happy with me this week? All right, let me make sure this is the right blue. I don't know. All right. Some of the times these computers, the trade station doesn't cooperate. Let's see what happens when I change it here. Yeah, yes. So I may just look at the weekly, the daily. You can see the E-minis. You got a red sell signal, a red bar. We've come off the high 97, 98 on the high jump, which we pointed out last week. It's down to 90. The daily bongo's gone red, so we clearly have a short-term sell signal on the E-minis. Longer and intermediate term, I wish I could show you, but it really looks like we're not cooperating here, and trade station's not changing signals. All right, so short-term weak, long-term hasn't changed much. If I look at the YM, sell signal came in Friday. Green's down here. We're down to 93. So we're still extended, not extended at a place of obvious reversal because we've come off that number. If I look at the NASDAQ, I'm really looking at the daily because the weekly and monthly don't seem to be changing. The NASDAQ's in a sell signal, down to 87. So we've eased off of the overbought nature. Now, the one thing that's been the weakest has been the Russell. And you could see it's further down in the pattern, 80% on the high jump. If I look at the dollar, well, you know what, I'm going to stop this and go into HGSI. The bottom line is the markets are a lot weaker than they were a week ago, and they may have more room to go down. Let's look at HGSI, and let's look at Major Markets Plus. All right, so I always go here first. I look at the top-down view, and I get a sense, make sure raw combos the rank is set, what was working last week. Now, the top-down view I know is mostly Fridays, a little bit of Monday through Friday activity, and then just a teeny bit of 3 weeks ago. And so what was leading is never good for stocks when the dollar is up. Now, interesting, transports were up, volatility was high, semis were okay, biotech and small caps got killed. Let's just take a look at the major market indexes, and let's open up another window. Great. And let's go into just my daily index view. So those who've not been here before, there's a lot here. What I always joke about is say green is good, blue is good, red is bad. So on the top, we have the Hindenburg. Now, notice in HGSI, it did not get a HINDY signal. That's interesting, and that's because there's slight difference in the computations. Now, in HGSI, there are two ways of looking for a Hindenburg. And the way I set up I don't want to do that. Let me go change the indicator. I set my window up as I've got both of them. I just want to make sure I have them both in this thing. All right, let me edit curve view. I've got two HINDYs set. One is based upon all index, and the other is based upon the bar chart market indexes, because there's a little bit difference, but we did not fire. Now, when I talk about the S&P, the next I have is my bongos. The longer-term momentum is still positive. I've got my indicator here, which gave a sell signal, which is a momentum indicator. High jump, you can see it's still fairly extended. There's no squeeze. Here's another way my indicator shows up again down here. Here I'm looking for Eurekas and Phoenixes. Eureka's a follow-through buy, Phoenix a sell, and I'm looking for kahunas, which would be a big movement in the market. So when we saw a Eureka, a kahuna, and a new buy signal come in, we knew it was time to get long. So where we're sitting today is interesting because we were in a box for a while. And I guess if I want to take a bullish stance, I would say I'm still in the box. Or excuse me, I'm still above the box. And this box may be maybe be support now. It was resistance on the way up. So the S&P has rolled over some. It certainly does not feel bullish right now, but it ain't over till the fat lady sings, and she's not singing yet. The Dow Jones Industrial Average similarly has not come back into its box. The NASDAQ Composite is just sitting on top of the box where it's been support a couple of days in a row. So if you want to be bullish this market, your argument is this is just a normal pullback after an uptrend. You're still above support and you're still bullish. If you want to call out reasons to not be bullish, you might look at the Russell, and you can see the Russell's just gone nowhere. Other things that we look at typically, we look at the dollar, and the dollar gave up some on Thursday. On Friday had a doji bar. But you know, I look at the dollar and what I see is sort of a wedge, and we'll see which way we break to. Falling wedges, to me, my expectation is the dollar's going to come down, but we will see. The problem is we got the best. Our economy is okay. Our Fed is loosening, but we may be the least loose and the best economy out there, and that's what's keeping that dollar propped up. The VIX, as I said, it moved last week. Here's your, I guess it was the VIX, the VXX had the green candle low. But you could see we had a reversal here on Wednesday. Thursday we had looked like it was going to run into resistance, and it still can't get above the PSAR dot. So the VXX, the VIX moved up but hasn't moved far. Gold and silver had been on big runs. I took some profits on my nugget this week, or JNUG, and you could see we had an inside day here, so maybe it keeps going. It's really going to be dependent upon the dollar. Still a lot of demand for gold. Gold miners look better, and silver had been outperforming, but I think it gave back some on Friday. But still, I mean, a dark cloud cover day is a bearish day, but we shall see. And look at the volume over the last couple of days. All right, the next thing I like to do once I've gotten a sense of what the market is doing is I like to look at what industry groups are leading. I look at the two-day force, and I saw here that we had only 23. So we've come down from the 80s in 2 weeks. And two-day force to the downside, whoops, that's not what I want, is 30. Now, it's not that big of a difference between 23 and 30. But perhaps it's what's in this group: biotech, large pharma, consumer finance, internet-based services, airlines, IT, life sciences, medical devices, generics, mortgage finance, information sciences, investment managers, healthcare services, managed care. You have the typical growth stocks, market leaders, got hit this week. So maybe they bounce, or maybe this is the beginning of something new. I like to look at the 5-day up and down, get a sense of a little longer time frame where you had, you don't want that one. To the upside on the 5-day, we have 26. Into the downside on the 5-day, we have 57. So even on a longer time frame, this market is weakening. So then I start to go through the list. So let's look at two-day force up and see if we can find anything that looks good. We'll start with precious metal and mining. Now the problem with these stocks is they've had a big run. So Barrick Gold, I mean, do I buy something at the high jump? No, but I might look for something else. Let's pull back. Majestic Silver, Doji. These have had a big run. It's hard for me to get in on a flagpole, but all of these were stocks that we were watching, I was watching, and that's why I decided to go with Nugget, and I still have a significant position there. Great look in chart patterns. but great to be holding. I'm not sure they're great to be buying. This is where I want to buy. I want to find at least short-term pullbacks. Here's another one where I get a lower risk entry. Here it's already popped. Odds are it's going to pull back into that, so I don't want to go long there. The other one that I've got a long position in now is Kirkland, and I like the earnings per share growth. This has been an outperformer for some time. And again, obviously, this is when you wanted to buy it in this range here. All right, so minerals and stuff look great. They're just overbought. Steel raw material. These guys have earnings are out. It's an ugly chart on the right. It's all over the place, but is it setting up a cup and a handle and a breakout? It's not based on the fundamentals, that's for sure. Lots of demand. This is Cleveland Cliffs. I think there's been some issues about pricing of iron ore and some supply issues, so that may help it. Just see if any of the others have a better chart pattern. I think Cleveland Cliff looks interesting, and it's one that's on my buy list. Look at the volume that came in on Friday, although it was options expiration, so maybe that's accounts for some of it. Department stores, hard for me to want to buy department stores, but maybe they've learned how to compete against Amazon. Look at Dillard's breaking out here. I can't buy a stock that's gone up from 64 to close at 80 in one day. It's too far gone. Now, are they being bought? Do they have good earnings? Did something happen? Do they partner with Amazon? Let's see what we can find out. Upbeat earnings. That's Walmart. Hold on. So analyst upgrades. That's a big move on an analyst upgrade. I don't like the fundamentals. It's not a place that I have any insight, so I would probably pass. Macy's, no, I don't have any insight here either, but at least I got a kahuna, my indicator firing. I'm sitting in a base. I kind of got a higher low in a squeeze. Everything's green up there. And let me switch it to my stock view. Look even better because we'll see if I got a kahuna, which I do. A mobile breakout from a squeeze. I like the pattern here on Macy's. I don't know anything about the fundamentals. I think it's a low risk buy down here. Pays a huge dividend, 6.8%. So that's the kind of thing I might go and add to my buy watch list. Kohl's, sort of a fry pan bottom, working its way up. Less exciting to me than Macy's, although it did have a high closed doji. That's it for department stores. So I go through each weekend. I start with going through the top 10 groups, bullish and bearish, and then I look at another 600 stocks. During the week, I just concentrate on the groups. Semiconductors. This is a group that doesn't look like metals at all for the most part, except Micron has had a big move off the bottom. Earnings are coming out. No, earnings are out. I'm sorry, not to September. Micron has had a big run here. It's up at the top on the high jump bar. It doesn't have any earnings per share growth. I would probably pass, but it's leading right now. Intel to me is a little bit more of a safer buy, a small turtle play. Doesn't have great earnings per share growth. Pays a 2.4% dividend. This is not my favorite group. Qualcomm. 4.1% dividend. Broadcom, every time I ignore it, it goes up. When I buy it, it goes down. I just, and this is a little bit better. Mobile breakout from a squeeze, pocket pivots, about to break the what I call the magic line, the moving average of the 20 period, not 10-day period, of the relative strength of the stock versus the S&P 500 on the weekly. So NXP looks viable here. Xilinx had popped earlier in earnings. It could go higher. I don't just see a lot of inertia or reason for me to go out and buy these things. Again, I'm not bullish on the market right now. Base metals, copper, got a lot of resistance here. so I wouldn't touch this till it broke above the 200. Did have a kahuna, pocket pivot, mobile breakout from a squeeze, so you know that's what I like to buy. I'd like to see it above its 200-day moving average and retest. Southern Peru copper, a little bit more attractive to me because it's got a lot of the same things going for it. It's also a copper play, and it's already above the 200. It came back and tested. I might be interested in that. I think it's already on my buy watch list. All right. So I go through the top 10, and considering what today is, I'm probably not going to go further. Steel, I will mention, Steel had some nice moves this week, and I will say this, another group, whenever I get interested in it, it goes down, so I'm interested in it, so that should tell you. Nucor was on Kramer, and that always helps. Acted like it's different now, and they're doing better. Mobile breakup from a squeeze, my indicator, pocket pivots, kahunas, weekly bullish doji reversal. Lot to like in this chart. It's got to get above the 200. U.S. Steel looks interesting here. It's going sideways. Its earnings are coming in August, so it's 2 weeks away. And Steel Dynamics is probably the one that I was most interested in. It's already started moving. I went long in here. Broke above the PSAR dot. I guess it would be this day here. And I have to decide what to do with it because it hasn't moved much, and it's coming in to earnings. So I typically go through the top 10 long and shorts, as I mentioned, of the industry groups, and then I come up with a buy watch list. Let's talk a little bit about what's on my buy watch list, and then I'm going to cut this relatively early. And my list is bigger than I thought it would be. There's a lot of ugly stocks out there, to tell you the truth. Auto parts looked, we'll start out with agricultural software and chemicals, agricultural chemicals. Fertilizers looked interesting. There's a lot of earnings per share growth coming in CF. It's got a little flag here, a weekly bullish close doji. I think this is interesting. I'd be looking for a breakout from the pennant. On application software, Momo is one I've been in and out of. It's gone sideways. It looks here like it's starting to move. Pocket pivot, kahunas, Jeffrey buy, and a mobile breakout. The other one I liked was this guy, and the only reason why I like it is it probably would be good to see the weekly. It's in a huge uptrend. It's pulled back to support. It looks like it wants to go again. Continuing on my buy watch list, a number of auto parts store looked interesting. Gentex had a bunch of my screens. You had a Bible gap up. You're already in an uptrend. You make money, although not much earnings per share growth, 1.7% dividend. Looked interesting in that group. Haven't got to my favorites of the week yet. I guess this would be one of my favorites of the week, Citizens Financial Group. As I mentioned, regional banks looked interesting. And so here's a stock that broke above what I call the magic line. Pocket pivot, kahuna, my indicator, mobile breakout from a squeeze, and a Bible gap up. And what I like most about it, it's not too far gone. So this is one that I'll be looking perhaps to play, especially if regional banks hold up, 3.2% dividend. And as you might see in my list here, I got a bunch of these guys. I don't understand why they're holding up, but they're holding up. Century Aluminum was another base metal stock that I liked. A bunch of these industrial pump plays looked interesting. I still think it's interesting. So here's Colfax. Yeah, it's in a downtrend, and that's a negative. It's in a short-term uptrend. Mobile breakout, pocket pivots, kahunas, squeeze, all the things that I like to see. Again, there's an earnings shortage. I'm going to use that word across a lot of the stocks in the market. It really looks like earnings are down. What else looked really interesting? AROC is a oil gas services. Pretty sharp pullback here. What got my attention here were the fundamentals and a 5.2% dividend. It's worth watching. I'd like to see some momentum come in. This is a watch list, not a buy list. EPRT was another stock that I liked. It's a REIT, uptrend sideways, and I'm looking for it to break out above its chandelier stop at 21. I had a Bible gap up, mobile breakout from a squeeze, kahunas and pocket pivots this week, so I'm interested. That said, this is not a great time for REITs, and you can see 3 out of 4 in a sell. And on Friday, there were 8 sells on REITs and only 1 buy. And just going down the list, there's some strength in solar. Here's First Solar, nice lower left, upper right. Probably would give it an intermediate looseness. It's certainly not tight. And it's pulled back to the 17. This could be a time to be thinking about nibbling on First Solar. This stock, I like their burgers and their chicken sandwiches, Red Robin Gourmet Burger. And on the surface, it looks like a stock that was sideways that had a mobile breakout from a squeeze with a Bible gap up, a kahuna, and a pocket pivot, and my indicator firing. All of that is true. There's I think a non-binding, which is the keyword, offer for takeover that it got end of the week at $40 a share. So there might be something going on there that would be interesting to watch. Last week I said look at trains, and CSX blew up. This one did not. Kansas City Southern's move is breaking out here. Mobile breakout from a squeeze. Everything that I like to see. In a clear-cut uptrend after a pause. And one for the bottom fishers. American Eagle Outfitters. There's a lot of over the last couple of weeks I've seen, we saw mention department stores here, but there's been some strength in teenage retailers, and maybe this is part of it. It's a bottom fish. It pays a 3% dividend, but it's currently under demand. So on that note, I'm going to wish my wife and I a happy anniversary. We'll see if my kids remember to call. Sometimes my son watches the video, so maybe he'll see from the video. You all have a great week. I do think this market's at risk. As I said, I'm still a little bit long, but I protected my big positions, especially Amazon with puts. I look at puts around earnings a lot like I look at healthcare insurance. It's expensive. I don't want to have to use it, but sometimes I buy it so I don't have to worry about breaking off the bank if I'm wrong and the stock falls. You all have a great week. Trade safe. See you next week.